that's the government incentive to entice people to do it. I mean,
Right.
So essentially, it's like the government's bankrolling.
Yeah. They're paying for a third of your system, basically.
Yeah, right,
Essentially.
exactly,
Yeah,
right.
they're paying for a third of your system.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
And a hot topic of late is solar. It's people are buying systems again like crazy. I mean, we're seeing a lot of ramping up. But I want them to understand this energy credit, this solar credit. Talk to them about that because that's important. They need to understand that.
Well, the most important thing about the energy credit is first of all, if you buy a solar a system for your house that produces energy in it, typically it's the solar stuff. But you can also be for heating the water, like for pool and stuff like that.
Oh, sure.
Some of that other stuff applies too. But if you're leasing it from a company, you're not eligible for the credit.
They're getting the credit.
You got to buy it.
Yeah.
And then so if you buy it, then you're eligible. In 22, the percent that you got back kind of was declined. I think it was like 26%. But this year, 23 to 32, I think it goes to 2032. It's back up to 30%.
So for the next 10 years or so, it's going to be at 30%.
Right. So if you paid, $40,000 for your system, you can get a $12,000 credit. It's not refundable in excess of the tax you paid.
Right.
But it is. You can carry it forward, so it's portable to go forward.
So it reduces your tax.
Yeah.
And actually, now, there's an important distinction between a credit and like a deduction.
There's a big difference.
Let's talk about that because I don't think people understand how powerful this is.
A credit is tax. It's not a deduction. So a deduction is if you have, say,
Your mortgage interest.
your mortgage interest is a deduction, right?
Right.
But if you deduct that against your income, and then if you've got $100,000 of income and $15,000 of mortgage interest that you're deducting and your other stuff, and then you've got $85,000 of income, multiply that times your tax rate,
Right.
like 20% or whatever,
Right.
and that's going to give you, what is it, $18 or something thousand in tax.
Right.
Well, if you take the credit and then if this was a circumstance and you had that $12,000 credit, you'd reduce that tax from 18 to 6.
Yeah.
That's the government incentive to entice people to do it. I mean,
Right.
So essentially, it's like the government's bankrolling.
Yeah. They're paying for a third of your system, basically.
Yeah, right,
Essentially.
exactly,
Yeah.
right.
They're paying for a third of your system. You've been listening to Las Vegas Real Estate Now. If you ever have a question about real estate or any of the other topics we cover, just call me off air or text me at 702-203-1165. You can also check us out on the web at lvrealestateradio.com or on our handle on social media at LV Real Estate Radio. We'll meet you on the radio next Saturday.